House Republicans set to deliver their ambitious legislation today after a day of tense negotiations over state and local tax deductions. President Trump spoke about the tax bill during a cabinet meeting yesterday.
You've heard it many times before, but it'll lead to tremendous prosperity for American families, communities, and also for our job-producing businesses.
Business leaders, especially hopeful for the new tax plan this morning. Joining us right now in a First on Fox Business interview, UBS Chief Investment Officer Mike Ryan, along with Bloodhound CEO Tana, Greene. Good to see you both. Thank you so much for joining us. And Tana, we wanted you here because you're a small business owner, and we want to get your take, along with Don Peebles, who's another small business owner. But, Mike, you've got new research from UBS this morning. Let's talk about that first. It shows how important this legislation really is for the economy. 44% of business owners said that they would invest more in their company if taxes are lowered, compared to 15% if the current laws were left unchanged. Tell us more about it.
Well, first, I think you hit on the head here. One of the things that small business owners have been reluctant to do is reinvest in their business and hire new workers amid the uncertainty about the tax code and also the regulatory environment. Let's not forget that as well. So if we continue to see the regulatory relief that we started to get through this administration, but you now couple that with meaningful tax reform that can benefit small business owners as well as large corporations, I think what will happen, you'll see a greater willingness to invest and also greater willingness to hire new workers.
Tana, will you put new money to work in your business, perhaps hire new workers as a result of this tax plan?
Yes, absolutely. I mean, when I look at how it affects me, and you look at what your earnings are, so say your profit's $1 million at the end of a year, which sounds like a lot of money, and people think, oh, wow, well, that just flows through to you and you pay taxes on it. Well, it doesn't, because it's cash flow, and cash flow is what keeps a business going. So all of a sudden you get a tax bill at 34.1% with that $1 million, and you're paying $341,000. With the new proposed, I'd pay $200,000. That gives me $141,000 to create 2 to 3 new jobs. Well, there are 6 million businesses like me out there.
That's a big deal.
If each of us created one, that's 6 million jobs.
That's why 29% of your survey from UBS, 29% of those said that they would increase hiring if the plan is passed, compared to 11% if tax reform fails. Don Peebles, you're seeing the real estate and tax treatment here a little differently.
Yeah, well, look, I think taxes do have a big impact on investment by small businesses. So take New York City businesses, for example. Right now in the real estate business, a real estate developer building condos would actually pay 53% of its net profits in taxes, between the federal level of 39% and the New York City and state tax at over 13%, almost 14%. And so
that's like the highest earner as well, same thing.
Well, yeah, because, well, businesses who are developing buildings, the issue is that you're forced, even though you have a business and you're building, say, maybe $1 billion development, that flows back down at the individual level, not at a corporate tax rate, so you're paying at the individual level. So that has to change, and these development projects are creating tremendous amounts of jobs, but yet they're taxed at a level far more regressive than, say, passive activities like capital gains. And so I think that that kind of job-generating activity ought to be taxed at the 20% level. And that means across the board. Any job-generating activity should be treated in a preferential way, especially the passive investment income.
But you're getting a big cut, and you're moving a lot closer to that capital gains rate. I mean, we want
look, no question.
Yeah, you're definitely getting a big cut.
No question we're getting a big cut, and it's a good thing, and every dime that we save in taxes is going to go back into our businesses, and that's going to create more jobs and more economic activity. What happens, though, is if you're paying more than half of your money to taxes, it's harder to put back reserves for a rainy day, and this is a volatile business.
Which is the case right now, by the way.
Yes,
that's
I know.
The case right now, 39.6, highest earner, and that's also what a small business person would pay at pass-through. So that's why they want to take it to 25. Now, you mentioned the economy. Your survey also, Mike, said that people are pretty optimistic about the economy.
They are. If you look over the course of the next 6 months, 65% are pretty optimistic about the outlook. But more important than that, Marie, if you look over 10 years, still 62% are optimistic. By the way, that's starkly different than before. Say if you go back 12 or 18 months ago, I think there was less of an optimistic view. I think what we've seen is a redefinition of what's possible in Washington. I'm not saying all these things are likely to happen, but we do see a change of what's possible now in Washington.
Mike, can I ask you, though, if tax reform doesn't get done and lawmakers fall on their face and fail to fulfill promises that they've made to small businesses, which has been history, quite frankly,
Start with healthcare.
Do small businesses, based on your research, cut spending? Like, does it, because again, if it's status quo and D.C. does nothing, then that's okay for the economy. But if they actually start cutting, then that's danger.
Yeah, so first of all, let me go back to this issue. Do I think small business owners will retrench or business in general will retrench? I don't.
Okay.
First of all, what you're seeing is that the business cycle is improving. What you're also seeing is the capital stock is one of the most aged capital stocks we've seen. As demand growth picks up, you just can't make do with what you've had anymore. So you have to continue to make investments in the business. What I think happens, though, is if we do get tax reform, that creates more of an incentive for investment, and I think that's going to drive investment spending even further.
Yeah, we've been calling it the gravy all year, right?
It'll be more capital. Businesses will have more capital to reinvest in their businesses, which is where we want it to go, not to these politicians in Washington, D.C. I think I think Congress has to do something on tax reform. Without it, I think that what will happen is there'll be a detachment from what they think, what business people think will happen in Washington, D.C. But I also think it would have a big impact on midterm elections because everyone's expecting some form of reform.
I will say this. One of the things that's interesting is what we found in our survey was that people are still relatively hopeful and optimistic about the administration. Yet, one of the things we've seen is that that's come down a bit since our last survey. And that's basically evidence that some of the missteps we've seen in Washington, the failure to get the ACA repealed, the fact that we spent so much time, energy, and political capital on trying to deal with that rather than focusing on tax reform, that's seen as negative. So if we do see, as you mentioned, they simply failed to deliver now, what you could see is that's probably going to weigh somewhat on business sentiment.
You're the chief investment officer at UBS. Do you want to still buy equities here?
We do. Look, I think at the end of the day, Maria, it's all about corporate earnings. And if we do get an additional boost to earnings that comes from tax reform, that could add another as much as $10 a share for S&P earnings in 2018. So it's a difference between earning $141 a share versus $151 a share. 141 is great because that's 8% earnings growth, but 151 is a whole lot better because then you're talking about double-digit earnings growth.
Yeah.
Now,